And don't sell yourself short.
Yeah.
Don't go out and sell super low. Exactly. And those numbers are going to change a lot because of that, and it's easy to do.
What happens in that grace is sometimes then you're listening to the Roofing Success Podcast, a show created to inspire roofing contractors to achieve optimal success in their roofing businesses. I'm the host, Jim Aline, the co-author of the books Internet Marketing for Roofing Contractors and The Best Known Roofer. I'm also the co-founder of Roofer Marketers, the leading digital marketing agency for the roofing industry. On each episode, I sit down with industry leaders to talk about their processes, the lessons they've learned, and how to find success in roofing. Hey, welcome to another episode of the Roofing Success Podcast. If you see the buttons in front of you that say like, follow, subscribe, do that for us. Leave us a review, comment, all of that. Man, my direct phone number is in the description. I don't know if many of you know that, but send me a text message, say hello, connect with us on social media, send us a message. We love to hear from you. Today we have Neal with Armament, Coating, and Roofing, Central Valley, California. How's it going, Brett?
Good, Jim. It's a pleasure to be with you today on the podcast. Right. Yeah, straight up out of Fresno, California.
The Bulldogs,
it's right? One of those places like not everyone thinks about. Yeah, go Dogs. Yeah, exactly. I feel like it's one of those places not everyone thinks about, but everyone knows where it is for some weird reason. I could kind of be across the country and say Fresno. Oh yeah, I know where that is. I used to say it's close to Yosemite. It's close to it is like the gateway to Yosemite. Then I got a lot of feedback. People would be like, what do you mean Yosemite? Like as if I was like, oh, it's the most important place in the world. But so
that's
lessons learned.
That's
I just say Fresno.
The I-5 99, I've traveled those roads many times in my life. So I've driven through Fresno didn't do too many stops in Fresno, but that's right.
Right. That's it. That's the typical. I've drove through there on my way to Yosemite.
So, cool, man. Give us a story. Give us a story about yourself and Armament and how you got into the roofing industry.
Yeah. Dude, I've been kind of following like your podcast and other just business podcasts. My wife and I are CPAs. I'm an accountant. We own High Velocity Accounting. I like to joke around CPA firms are like gas stations. There's one on every corner. So, how do you stand out? You niche. And we were really fortunate to connect with a HVAC company and just watched him grow and then just really got connected with the industry and being a part of the home service professionals. I'm an aircraft mechanic back in the day when I got out of high school. So I kind of have a blue collar side to me and I just enjoy almost the physicalness of it. I mean, maybe you don't see as accounting as physical, but actually like really like getting in the books, almost like opening up a hood and kind of diving in and seeing how things are going for somebody. But I got the entrepreneurial itch, just really watching people's success and wanting to be a part of that as well. And I connected with a local roofing contractor here in Fresno. And we sat there for about a year ago over dinner and breakfast and talking about it and hashing it out and saying, hey, you guys, you want to do this and give it a shot? And we started. He had it going for a while, a few years, Armament, Coatings, and Roofing. But I said, hey, let's rebrand. Let's dig in. Let's get the trucks wrapped. Let's do. If people say, hey, nobody's implementing, I was kind of like, well, hold my coffee. Hold my beer. Watch us do that. So that journey's been crazy. I'll be honest, Jim. Like probably none of it was half as easy as I thought it would be. So
it's crazy, right? Like there's I saw there was a quote recently that I saw from a marketing influencer these days. His name is Alex Hermosi, and he, I think it was him that he was like, "This is what work feels like." Like when you get into it, right? You're like, man, this is what work feels like. Like when it looks really easy from the outside. I know we have a lot of listeners that are on, maybe in the sales side or even, a production manager or something like that. And especially from the sales side, I think it happens in the industry a lot where it's like, oh, well, I could do that. Like, what's so hard about running the business? And then it's like, all right, well, you'll find out. Like church would be amazing if it wasn't for all the people. I think like Dave Ramsey said something like that. Turns out it's the people, and that's what you need to work with. And
build relationships, and just, you're putting stuff out there, and you're getting feedback. That's the crazy part. You're getting honest feedback from the population, from the people that you're marketing to, and your reviews. And okay, I do need to look into that. We do need to refine that process. We did. How come the phone got missed? Like, what happened? All that kind of stuff. So.
And that's the fun part of business to me, is that consistent iteration, right? Like, it's like, let's just continue to find problems to solve. And I think that if you get into that mindset and you get into like, man, let's just look for the next thing we can get better at. And in that, like, going through that process, you look back years from now and you go, wow, I don't even know how we were even existed back then. Right. Like but that's the fun part. I think something that is overlooked and, from knowing you a little bit here is that, man, we talk a lot about marketing, sales, the production process, getting reviews, hiring. But I think there's this component over here in the finance and accounting side of things that, people don't know. Like I think that's one of the areas of business that it's less easy to figure out. So you have to learn what a financial statement is and what financial statements to look at and where's this number coming from and why is it placed here instead of there and but we received this cash. Why didn't we allocate? Why isn't it showing on my income statement? Like, where is this? Like, there's so many things that accounting was. I mean, I had no fun in any accounting classes in school, so I don't know how you do it. But over time, I've gotten to learn. Wow, that's where you're checking the pulse, right? That's where you're seeing you're checking the vitals of your business. It's easy to see the marketing and see the phone call coming in and get your sales scripting better and, deal with refining your production process and creating a better customer experience. But sometimes the pulse is off, and that pulse is over there in that, on the finance side, on the accounting side. Once you told me in our conversation about you have a framework that you like to explain it in, the 4M framework. Maybe let's start there.
Yeah. Well, you made me think about a couple of things. Like, I mean, is it, if you were to have a blueprint, is it sales, marketing, and accounting? I mean, is that kind of like what are supposed to be part of the business? And if you're maybe fortunate, maybe you don't have a board, but people that you're meeting with and just talking about business, if you're out just trying to operate the business, that's tough. Yeah. We all know here working on the business. Well, accounting is definitely working on the business. And I was laughing when you think, yes, you want to kind of fall in love with the numbers. You hear know your numbers. Well, what numbers are you supposed to know? And it's not just know your numbers doesn't just mean financial accounting. That's statistical stuff too. Your conversion rate and how much is the phone ringing and how much is your cost per acquisition, that kind of stuff. But I laughed thinking about that because yes, you want to get to love your numbers. You enjoy looking at your financial statement. But what is it when the market's down? 90% of people don't look in their Charles Schwab accounts or their TD Ameritrade or whatever, right? They don't want to look when the numbers are actually down. So, I feel like a bad P&L can kind of give you that same gut check.
Yeah.
But it's something that is part of having and running your business and being knowledgeable about. The 4M process is really just something to kind of talk around accounting and kind of keep us, not just you and me, but other people that I'm talking with, because accounting can be kind of boring. The first M is maintenance, and that is the tediousness of doing accounting, debits and credits, and making sure your credit card transactions and banking transactions, and that your CRM is working and connected with whether you're using QuickBooks or Intact or something like that. And having the two systems agree. If your CRM said that you made $50,000, $60,000 in a month, you would expect that your QuickBooks and financial statements, top line gross revenue, should also say $50,000, $60,000 for that month. Then it's kind of where did the money go? And that's one of the things that we tend to see is missing deposits. Maybe somebody received a check from doing a service job. They closed it out, in Job Nimbus or something like that. And then it's but the money never hit the bank, and it's on the floorboard of my truck. So kind of doing that, just making sure that all T's get crossed and the I's get dotted. And that is the first M, maintenance, bank statements, reconciliations, putting together a good P&L that's not not also just industry standard, but makes sense to you as the business owner. When we're putting together, there's GAAP, generally accepted accounting principles, and tax wants it to go a certain way. But Jim, you kind of had me thinking a little bit earlier about the form of like a profit and loss statement.
Yeah.
Building out not necessarily like this GAAP financial statement, but more of one that tells a story of your business. It kind of presents cash flow. And so we're looking at gross revenue, and then we're taking away, like what did it cost to get that money? Any credit card transactions if you used a finance company. And then we're taking away direct labor, or the labor that was used to do the install or the service. We want to check for materials and equipment, and that gets you to like a gross margin. And I think you hear a lot of contractors talking about working in the margins and how profitable was that job. And then you still have general and administrative, all the stuff that I used to kind of say it's the money you get to play with, but I don't know that I feel that way so much anymore. I mean, trying to run the operations is it really playing with, right? I mean, general administrative, that's maybe you got a ping pong table or a pool table for the guys to come in, maybe you have a nice shop, you have branding. But some of that stuff can be overdone. I think a lot of contractors are feeling it this year, going out and doing the kind of the Tommy Mello thing, if you will, like, hey, we got this. Let's invest in our team. Let's invest in our shop. Let's go and expand. And next thing you know, the calls aren't there and the cash isn't there either. So you're kind of like, oh, what's going on here?
It definitely happens it can happen that way. So there's always the projection, and you're projecting and looking back, right? I think that's what I learned over my years of business is that, you're really, one of the things that you're using is that historical data to predict the future in a way. And maybe that's, but maybe not part of that maintenance mode, but that maintenance mode is if you need to get those dollars reconciled to make sure that you have a clear picture of how to use those numbers, right? So first, I guess it would be know your numbers, right? I guess that maintenance mode is really getting that understanding of the numbers that are actually the dollars, the debits and credits that are being made in your business. Would you say that?
Yeah, maintenance is having those tied out financials, all the transactions that it took to get that into the right line items on your profit and loss and your balance sheet. Maintenance is having closed books by the 10th.
So one of the things that you had mentioned was with around a P&L is like, because you can have different, I guess there are different styles of P&Ls people might not realize, right? But one of the things you said was a P&L that helps you understand your business. Speak to that a little bit more.
Yeah. So I feel like if we just use template financial statements, or you might find one in a book that kind of helps you, hey, it should have this. There's probably not a lot of, I hear other people that talk about, hey, I looked at 100 financial statements this year. I've looked at all these different companies. One of my first questions is, well, great, how good is the data? Like, what's really going on? I mean, we hear about big companies that get audited that fail audits all the time. So how good are the small guys doing at collecting data and making sure it's going into the right bucket? And I do mean for your own personal information as well, because you might have an account, like maybe just where you're at in your company, maybe training, maybe you're onboarding a lot, and that's a significant cost, right, to the process, to your overhead, when that's just something you want to track. So sure, we could talk about being in a 50-60% gross margin and not more than 25% general and administrative. But what about just something specific to your company? Like I say, like kind of talked about a minute ago, wanting to take care of your internal clients, spending a lot of money on training, or maybe the pool table or a ping pong table or something like that. But also the story. I mean, the big picture is you want to know the job. You want to know, in a sense, a financial statement is job costing. If we do enough jobs in a month or 2 months or a quarter, then we can put together a well put together financial statement, profit and loss. And that, in all essentiality, is a job costed, right? We have our gross revenue, what it costs to do the job, and we have our gross margins.
And that's like the foundation, right? You got to know those numbers. I think the next M you said is metrics. So like, let's get into like some of the, where are you looking? Like I hear it a lot. So let's just go to like in insurance restoration, I hear 40% gross margin, right? Or 40% margin. I hear in more in the retail, maybe you should be in the 35 range. And then, one of the things that I think that people don't think about in their margins is building their margin with the knowledge of what they're actually going to be the money going out on a job. So labor, materials, but then also marketing, general, like you're saying, things are, general purpose stuff around the office, your paper and your, computers and your, all the different things that go into it. I think a lot of times they go, this is what the market is. Like everyone's looking at the market and saying, this is about what we can sell at. And then they're working their metrics backwards instead of building their metrics from zero. And am I making sense there, Brett?
Yeah. Well, I'm kind of thinking about what you're telling me. I mean, there's a couple ways. Like you want to have, I think it's great to be the right price. That would be ideal. If you're getting a bit of kickback from a client, it's like, well, at least you confidently know that you bid out at the right price that covers your overhead margin and the profitability that you want to be at. And you understand the direct costs that went into it and how efficient your crew is. So you're not just throwing out a number per square just because the boss said it, 850 a square, 1,000 a square, or something like that. Yeah. But at the same time, what I was thinking about, like what you were saying about the, going backwards. So yes, in a sense, but I mean, ideally you want to have a profit and loss statement that resembles the work that you've put into like your price book, your job nimbus or something like that. In a sense, all the work that you've done in the beginning to go and sell that job, the financial statement should support that. Yes. Basically. It's like, okay, we did price our product right. We do have the efficiency of our crew right. We didn't have as much waste or whatever that we thought we were going to have. And then then you kind of dig in deeper. What's general 5 to 8% for marketing? Did that make the phone ring enough times to actually get the jobs that we wanted? So you still need to know what I feel like gross accounting isn't going to tell you is average ticket. What's it take to make the phone ring? How good is the sales individual? Like what's his conversion rate? So that's big picture, know your numbers. And in the second M metrics, you want to be able to bring that in. You want to have your CRM statistics along with your financial statements when you're looking at your profit and loss statement, you're looking at your margins, gross margins, and tracking the individual accounts, your big five, maybe it's rent, training, auto, of course, materials and equipment, right? And then you're looking at your balance sheet. How much cash do we have? How well are we financing our debt? That kind of stuff. You get into that EBITDA talk, if you want. But I mean, really, like the fun numbers are gross revenue, and then what did it cost us to do the job, and then how much money do we have left?
Yeah,
and well, I was thinking about it. I hear lots of different numbers. I mean, I feel like roofing. I'm told it's 35% gross profit margin, 10% net profit. But then I talk in other groups, and I'm hearing. 65% close rate, average ticket $40,000. Easy to do 25% net profit. So it's a little bit all over there. I mean, in roofing, the numbers are big. I joke around. It seems like the numbers are big, so the margins aren't as important. It's not like you're out doing a $333 service job. Like HVAC is pretty often. Right? You're doing a full install on a roof, or maybe like we do at Armament. We have commercial coatings. So we're doing a lot of the polyurethane and that stuff. So those are bigger tickets.
I think that sometimes there's like a fudge factor that you can like play like that with you get some grace from large from having a high ticket, right? Like there is a little bit of grace in there, but I think but let's go into what happens in that grace is sometimes then I think maybe people don't get focused on the right numbers. So what are some things that a contractor might miss because of the large number of the large. It's like, oh, but we still made $2,000 on that job. We're fine. Or we still made 10 grand, like there's, oh, it's all right. It's okay. And so I think that maybe they like, you can lose. You don't have to be as intentional sometimes about, oh, well, let's make sure every dollar is where every dollar needs to be, and where, being very intentional about that. And maybe I'm wrong, but I'm sure everybody runs their businesses differently too. And there are people that are very detailed about their books, and there are people that just, hey, is there money in the bank account? Cool. Like there's a wide range of business owners out there. But what are some things that, even with the large jobs and having a lot of gross margin, like what are some things to keep an eye on?
I mean, when I'm thinking about it, and we're guilty of it too. There's times where it's just been like, yes, that was a positive cash flow job. In no way hit our metrics or margins, but you know what? The crew was employed. We're able to pay rent, like everything. Yes, it's positive. Yeah. I mean, if you look at large contractors, they're looking at like 2% net profit, 3% net profit. At least that's what they report in on whatever statistics that they have to report in on. I think a lot of that is overhead, the owners usually not running the company as much, but we're trying to get our smaller companies down to 15, 20% net profit.
Yeah.
But yes, with the bigger jobs, if you have $100,000 job, you don't have that much overhead, and you can, do $400,000 or $500,000 through the company. Maybe you don't. Now you're leaving a lot of money on the table by not really managing your team and the efficiency and waste. And then I also think too, Jim, like what maybe you're not catching is, yeah, we had a positive cash flow job, but what did I really do to my crew? How worked are they now? Like how's the morale after that job, where they just all know, like, man, we didn't kill this job. I know it, we're all out here working. And then was there an opportunity that you gave up? That's the next concern, right? So if you're not really watching the margins and you're not able to effectively manage even the higher ticket jobs, the question is, well, what did you give up? Was there something else? Could you have done a better, higher paying job? Could you have made their staff a little bit happier? Because if you win, we're going to have bigger bonuses, and we're going to have bigger commissions and that kind of stuff.
How are you like in your accounting business? How are you kind of helping business owners in understanding those metrics, like of down to that job costing of, man, hey, look, you guys missed it here, and this looks like it's a trend. Where should they be looking and making sure that things are not getting out of hand? So
a budget, and really we're still kind of in the second M, but we can move to the third M, which is management.
Got it.
Budget is the guiding light. It is your map. We want to do a seasonal budget. So if you're company like plumbers, they say they don't have the seasonality. Roofers definitely seem to have seasonality. HVAC has seasonality. So one thing is you want to know your ups and your downs, your high months and your down months. And then you want to just break it down. What we do is break down average ticket and how many jobs. So if I say I'm going to do $500,000 in January and I do $100,000 commercial jobs, right? It's 5 jobs. Now, what my number, did I actually do 4 jobs or 6 jobs? Was it actually 75 or 80? Like I'll never know, but what we're doing is building a budget. And then we say, depending on how much time you have in your company, for us, we like to look at the last 3 years and kind of just create the averages around that. So what was your average auto expense? What was your average payroll and all that kind of stuff, and just break it down. But also, if I'm guiding and I'm teaching, then I'm going to say, okay, this is also industry standard. So this is where we want to be. But again, I recognize Jim has his own company, likes to spend money a little different way here and there. So we recognize that. Once you have a good seasonality based budget that actually is based on your average ticket and number of jobs you're expected to do or you're planning on doing, and then hopefully you have good project management, you understand, how many team members and all that kind of stuff, then you have an idea of like, okay, we're looking at 15 to 18% net profit for the year. January is going to be a loss. We're onboarding, we're training. We're not at our max capacity, right? That's going to be coming in April and May and June when we start installing more residential roofs. So I'm kind of taking a loan out for the next couple months, a loan out against my company to keep it going and keep it floating. But I know once the busy months hit and I'm on my map and we're tracking along, the phone's ringing like it's supposed to, marketing's working like it's supposed to, then I know that we're going to be cash flow positive. We're going to pay off our cash loss in January or February, and we're going to get back on track. And we're still going to be, like I said, an 18% profitable company, but we're going to have those slow months and the high months.
Yeah. And understanding that there's, we're up in the Twin Cities in Minnesota, and man, it can get to be a little worrisome about this time of year. It's been a while since you can't install a roof up here, and we're in January now, and going into February, and man, all of a sudden it's like, if you haven't planned for it, if you haven't put the thought into it, if you're not expecting it, maybe that's what it is. Maybe the budgeting and planning is making sure that you have the proper expectations to sleep at night, right? Like, and not that, all business owners probably have a few sleepless nights every now and then, right? Like it's, but getting that understanding, now you have something. But then going back to the second M, which is metrics, is now if you're staying on the correct path, right?
Sure.
What other tips around managing that management M?
I mean, it depends on where you're at in your company, but I feel like a lot of the companies that I work with, so the circles I'm in are growth. Everyone's growth oriented. So what is those management meetings about? Well, it's how can we increase volume? Can we increase pricing right now? What's it take to keep the phone ringing? Is everything we're doing working, and can we be more efficient? And the financial statements are the summary of all of your efforts. It is a mirror, in a sense, of all the work that you're doing, and it's gonna appear the efforts or the lack of effort or whatever's kind of fallen off. You're gonna see that in time on the financial statements. So I think having the budget, your guiding light, and then having the financial statements and getting together with your crew, whoever your leaders are. There's I don't know who all wants to be involved. I mean, I've given in my early days financial presentations to boards, and I was sleeping with them. While they were sleeping, I was, you know what I mean, right? Like I'm so sorry, this is so boring. Gotten better at trying to make some different presentations. I really enjoy break-even analysis. I really enjoy pacing. So if we're talking about doing 8, 15, 20 jobs, we want to know on Monday, day one of the month, how are we pacing? How much money did we collect? Why, let's get the phone calls. Do we need to outbound? Like, what is it that we got to do to keep this business going if we're not hitting our numbers on a daily basis? Don't wait till the end of the month to find out. But that is what the management meeting is about, is to really look at break even. Do we have room to grow? So, okay, great. We're actually finally hitting the numbers we want. Our sales guys are crushing it. And we do have money for growth. What would it cost us to add another truck, to start training employees or groups of employees? Could we add a second line? Like us, we do painting, coatings and painting. I'd like to get into concrete, floor concrete coatings.
The concrete coatings, yep.
To add that. Yeah, but that's a whole nother team. Right? Even right now, my contractors, like Brett, he was so funny because he was the one telling me, winter's going to be a little bit rough. And I'm like, no. Like, we got this. We're going to get out there. We're going to hustle it. It's going to be fine. And yeah, definitely getting handed to me on this one a little bit. But I'm learning, now right. I know what the budget will look like for next year. But yeah, and then I still wanted to do the concrete floor coatings, and I got a lot of pushback on that right now.
That's all right.
I'm excited about.
Sometimes it's getting the one thing mastered, right, and then moving on to the other thing. There, I don't know, in entrepreneurship, there's always you must have a visionary streak in you. If you're in EOS terms, I don't know if you guys use EO or have read the book Traction, but the visionary, like, man, your team has to rein you in sometimes in that. It's always it's that push and pull with the team when it's like, but there's so much opportunity out here, let's go get it, right?
Exactly.
One of the things that made me think about when you were talking about that is like making decisions on when, right? So when is it a good time to expand in this way, expand a service offering, add a truck, add people, at a position. Maybe you're getting to a point where you may need another job site supervisor, or should we add more salespeople? I mean, the answer seems to be yes, just add salespeople, right? Like a lot of times it's just like, just keep bringing the salespeople in, because there's the more sale, but
Right.
when you get intentional about it, it's one of my mentors said, what you focus on expands, right? So when you focus on something in your business, it really can expand. Another thing, increasing pricing. Like how intentional are you as a business owner about your pricing, and and when should you look at your pricing? So I just threw out like 50 questions in one there. So
Right.
like let's talk about people first. Like when, from an accounting perspective, from the numbers, from the from your financial statements, when are they telling you that, yep, hire this person, don't hire this person? What are you looking at there?
Well, I mean, if I'm speaking to growth, and we're being honest about making money in the months that we're going to earn
Yep.
money in, you need to go out and crush that, right? So if the slow months are slow, there's not a lot you can do about that. But when opportunity is abundant, and in your busy months, you really need to be out there closing and selling as many deals as possible. So that's when you add money, basic like overall money
Yeah.
to your bank account during the busy months. So really, you don't want to be caught trying to train and onboard at the moment that you're super busy, when you need to be running efficiently and everything should be working, and that adds to those down months and that cash flow. So having a plan where you know that, okay, we need to foot the expense of onboarding another 2 guys or however many crew for 2 to 3 months while we get them trained and while we make sure they understand our process, and a truck to get them in too, right? So I really get that. I mean, it's an ongoing. I have 3 things on my board: recruiting, SOPs, and vision.
Yeah.
Right, one third of your time, kind of. I don't get to spend as much time as I want doing any of those, but always onboarding, or at least recruiting. And I definitely hear it too a lot. If you connect with the right person, I mean, you want to be able to keep them and get them on. Because good people do add to the bottom line. Everyone, if they enjoy the vision and see where the company's heading, and you don't want to tell that person no just because you don't have cash or it's not the season. If they're someone that can help the company, you want to bring them on. But with that being said, I mean, right, it gets back to, you have to be a profitable operator. There has to be cash flow, and it can't just be to support your lifestyle unless that's kind of where you want to be at. There has to be money for the investment and growth of the company. And that is going to be in the painful time, in the slower months. I mean, it's great to have on the job training and, hey, we're working, so just hop in the truck, let's do some ride-alongs. But you don't want to be caught with your pants down, right? Like, you don't want to have unprepared people out there supporting your company.
That's another thing that you said something that made me think. It's like growth versus maintaining the business, right? Like if you're in a growth mode, expansionary mode, you may look at these numbers differently than if it's hey, it's business as usual. This is the team, this is our goal, and we have the team to achieve the goal, and we're just going to achieve the goal year after year after year after year, and we're going to make a nice living for ourselves, and we're going to be good. There's a different mindset if you're trying to go from 3 to 5 to 10 to 12 to 20 to there may be more investment that's needed to
right, exactly. And those numbers are going to change a lot because of that, and it's easy to do. If you're 1 million, we did $1.6 million last year, like really stoked for armament.
Yep.
That totally exceeded what we thought we would do. But now this year, it's like, okay, well, reality is we need to be closer to 3.5 or 4 million was kind of the stretch. It's doable when you're small. Doubling is not a huge thing. But once you get up to the 20 million or however big, then it's marginal, right? We're looking for marginal growth. 10% would be amazing. I mean, if you're following stock market companies, they talk about double-digit growth. I mean, that's all they're talking about is 12% or something like that. So, as you get bigger, yes, it can be more maintained, more managed. You're really going to see the small things that you do to drive those numbers. Whereas when you're smaller, yeah, the numbers, you're kind of chasing it a little bit, trying to chase your actions with what actually fell into place on the financials.
Yeah. Another thing that you made me think of was pricing. Like, when do you like increasing pricing? One of my early episodes, I had a guy named Eric Reno on, and he talked about how he would test the market, or his sales reps would test the market. He would start them off at a lower margin to make it kind of easier for them to sell, and then as their skill set built a little bit, and I'm paraphrasing, and I'm probably getting it wrong of exactly how he does it, but essentially it's like, now sell at a little higher margin, now sell at a little higher margin, now sell at a little higher margin, and if you can maintain a close rate and continue to improve that margin, because there are companies out there, it blows me away. So there, you're out in California, so maybe you run into DeBella. Have you run into DeBella? And they're more, maybe they're more northern. They might be more Northern California, but they're in like Washington State and all over the place. And I was talking to a guy up in Washington State, and he was telling me that DeBella came to town, and it was, smaller market that they were in, and like, there was like three main companies in the area, and they all three main companies, and they all they were around 450, 500 a square. Like, that was kind of what, the market had settled at. And then this big corporation comes to town, and they're double that.
Right.
And they were winning the jobs.
Yeah.
And these guys were blown away, or this owner was blown away. He didn't understand like how this company could come with twice the price. Chuck Toki from Top Rep is another person that talks about it from his time at Able Roof and Mr. Roof. At the pricing that they sell at, people were looking for a way to buy from them, even at that higher price point. And so I think when you're starting a business, sometimes you just got to get that cash flow coming in the door, right? You need those successes to justify or to verify that you're on the right track, right? Like, okay, we can do this. We can do this. We have small successes. We have more and more successes. But then there's a certain point where we have to be more intentional maybe about pricing. And in that, what would you, from an accounting perspective, what would you look at in terms of pricing and how to continue to increase those margins? Because again, and what you said too, it's easy to go from, or not easy, but it's easier to double in the early days, right? It's easier to double in the early days, but once you get to a certain level, that incremental growth is what you need, and you may need more marketing to get that 12% growth, as a $10 million company than you do as a, going from 1 to 2, right? Like, it's there's a difference there. How would you recommend people look at pricing, and when are you hitting that ceiling? What metrics are you looking for to know that you're pushing on the top end of that?
Well, I mean, gosh, right? You shouldn't be closing 100% of your deals, right? So the statistics still kind of come into play a little bit. But then again, if you're not closing 33%, what's going on? Right? Is there a sales guy just scared? Is he even asking for the close?
Yeah.
There's a lot of stuff going on there. One is, so I don't know how like Job Nimbus works. We use House Call Pro. Yep. I have a lot of clients that work within Service Titan. So we manage the price book closely. Service Titan updates prices automatically. So if we use their purchase order system and the prices changed at the vendor level, then those prices get imported into the price book right away. And updates based on your margins that you have around all your prices and cost of goods and that kind of stuff, materials and tasks. So that's one way, but for most people, like definitely, and that gets back to the first M, the maintenance. Yep. In the accounting system, we use it's a company called Dext, but there's a lot of different companies out there. But basically, it scans, gets a copy of all the invoices beforehand. It reads them, uses AI, and then brings that into QuickBooks. So what we're managing is accounts payable, right? We're trying to manage and match cash flow out with the revenue. That's the good time to say, oh wow, the price of bundles have gone up, for whatever reason, or I know most people know this, right? It's like average is 3 bundles per square, unless you're doing the presidential stuff, then it's 5 bundles per square. You should probably catch that pretty early on when you're building out your price book. I did not know much about roofing as I've learned a lot this year, but definitely. So watching it, but you can't just go and raise prices. I wrote some notes when you were saying all that stuff, like the Starbucks effect. I mean, that's actually pretty awesome. That company came in, and if the other companies will jump onto that, like go for it. Why are you over here barely, driving a truck that's kind of broken down and barely doing 400 a square, and no one in your company's happy when you got this huge company that's selling it at double, and they got new trucks and they have a clean facility and their workers are well taken care of, and maybe they're even able to do stuff for their family, right? The employees. And that's definitely one of my goals around armament is it really is for the employees. Like if I were to have a passion, it's like, man, I want to see you guys win. I want this for you. And I want you to be able to come to a nice place during the day and drive a safe truck and feel comfortable in everything that we're doing because you've been trained and know that there's room for growth. With Bakersfield to Merced, more or less, kind of own the 99. That's the entrepreneur side of me.
Yeah,
still,
but that makes sense. That may be something that people don't think about, and this is where I like where this is going, because a lot of times we're not building in that. We're looking at labor and materials, right? You're not looking at the experience that you can create for your team. Right. Like the benefits that you could, going out and getting good benefits for them, going out and, matching, all the retirement accounts and doing all of the stuff, right. Having, having nice vehicles to drive in, having a nice place to go, nice, clean place to go to work, having like a lot of that, though that has to be factored into pricing also. Right. And maybe they, in the beginning, in the early days, you're not going to be able to, right? You're just trying to get things going, but maybe having that vision of, man, this is what I want it to look like. What does that cost?
Exactly. And don't sell yourself short.
Yeah.
Don't go out and sell super low per square price or something like that, just to get the job, because in the long run, that's just was it where they say like a fight to the
race
bottom?
To the bottom, yeah. You're just
race to the bottom. Yep. And then the second one is, your sales guys, right? There's we can't get that here. This area is just not, that's not gonna work in this area. Kind of get that, get your mom out of the truck kind of idea. Like, I know, honey, right? Oh, we're gonna save money today. Like, no, you're not them. They want to go golfing. They can't fix their own roof, nor do they want to. What they want is you to show up on time, to be clean, say please and thank you, to give them a good experience. And if you can do that, then there's a little bit of room for charging more. And that's then what we can use to bonus out, provide better commissions, and help the team win.
Yeah.
So, it's the experience. I think, what do I want in my own house? I call contractors and no one calls me back. No one shows up. No one, people give me ultimatums, not solutions, right? Like, did you even hear what I wanted? You're just giving me like, no, this is what you get. What are you talking about? So.
It's crazy. There are a lot of great contractors, right? There are a lot of great contractors, but boy, there's a lot of not great contractors too. And it will amaze you how being professional and doing some of the right things will create a gap between your company and the next. And then the more things that you do better, I mean, you can create gaps in unless you're in a major, maybe a major metropolitan area. There's probably going to be a more of those types of companies. But my goodness, man. And maybe, now with, private equity coming in and a lot of, their technology has brought a lot of professionalism to the industry. I think that there's a lot of more business owners. I mean, like yourself, right? You come from the accounting side of things. You don't, you're more business minded. You're not from the trades specifically, right? Like times are changing, right? And so if you are not paying attention to that, if you're not doing those things, boy, you're really going to get left behind, because it doesn't take much anymore. Let's talk about money a little bit. Last M, because I want to make sure people understand that. Now, you had a good one. Everyone's talking about EBITDA, right? Because of the private equity world and things like that. Talk to that a little bit.
Yeah. So, I mean, EBITDA is a measurement of basically essentially cash flow in the company. Are the operations profitable? Despite everything else you do despite the fact that you went out and got a bunch of loans or whatever it takes that you're paying, interest on, or whatever the area is that you have taxes in, just can you operate this company profitably? That's essentially what EBITDA is. Not the end of the world for day-to-day operations. There is a little bit of return on equity, return on capital, if you wanted to kind of get into that, watching those numbers. But again, when you're smaller, those aren't things that move the needle. It's just something you're kind of like looking at. But it's going to be a valuation number. Essentially, it was what like private equity. If you want to sell a portion of your business, if you're a shareholder, like you have an S corporation and you're a single shareholder and you want to split it with a spouse or a child, it's like, well, what's the value of this company at right now? Family's different and how you choose to let that happen. But if an outsider is buying, they want to kind of put a number in a valuation. It's not just cash flow, right? It's how big is the net around your clients? Do you have memberships? Are they recurring or is it one time? That's where roofing takes a beating with PE, private equity, is because it's a one-off. Yeah. But I say, is it? Like, it doesn't have to be. I mean, why are we not coming back and cleaning up all I recognize we're keeping the work site clean, but like, why not sign owners up for, hey, let's blow down, let's get the leaves off, let's keep it clean for the next 3 to 5 years. We'll come out, we'll clean out gutters, make sure this thing's shining for you. And then they get used, customers get used to you coming out like, oh, he takes care of my roofer. That's Armament Coatings and Roofing. They take care of my roof. There's nothing wrong with setting up that moat around clients. That adds to valuation, but money, so maintenance, metrics, management, and then money. And what I joke around because, yes, everyone knows about EBITDA, but I say EAT, earnings after tax. What are you left to eat with? And at High Velocity Accounting, we want to give you that big picture of not just what's going on in your company, but what is Jim's life all about, and what is his big tax picture. So we want to do financial planning essentially for the whole year, because you might have investments, you might have rental property, other things that affect your tax. And if you're in a small business, there's things that you can do to kind of manipulate to get a best tax outcome. Yep. So, earnings after tax, increase overall cash flow, not just focus in the business.
So what are some of the things that you see business owners doing on the money side?
I'm kind of thinking about where maybe they own the shop, the building that the business is in, and they're leasing it back to themselves. Another one is, like I talked about, real estate is probably a bigger thing, right? As business owners tend to have more money, they want to diversify a little bit. Bitcoin is something hard to chase. Like, that makes your tax return more expensive because of right? Chasing all the sales and stuff of Bitcoin or like stocks. But I would say, for the smaller business owner, there's not so much. But if you're talking about like entity selection, and state to state is different, but an S corporation really leaves owners a lot of room for manipulation around taxes and timing, versus say like a sole proprietorship where you're kind of just stuck with that additional SE tax. Maybe you're an LLC and you haven't chosen to go C corporation or S corporation. Maybe your building, if you did own the building, is added an LLC. Then there's a lot of stuff on the tax side. Like, really, yeah, the tax law is insane, but if you use it effectively to your advantage, there's a lot that you can do to save money without having to, lie, cheat, and steal.
Yeah. And I mean, if you're just using the tax code, it's not lying, cheating, or stealing. It's just using the tax code, right? Like I always think it's funny in the discussion of that, like, on the news and stuff of like, oh, he manipulated his taxes. No, you just paid what it's worth. Like if you there's a term for manipulating your taxes so that you don't pay as much, and that's tax fraud. Like that's a different thing than just using your deductions, right? Like, don't commit tax fraud, but like, hey, if there's a deduction you can take, maybe worth, like it's on the books. It's an actual rule,
And that's another one too. When I think about money, is we're not thinking about just this year. If you are a company that has invested in trucks and you plan to really grow a lot in future years, well, for instance, in tax, you get that Section 179. You can take all the depreciation in your current year. Yep. But what are you going to do next year when you've doubled your income? Now you're just going to have a huge tax bill. So when we do the planning, we're really trying to look at big picture. When are those trucks going to roll off? Yeah. How are we going to add new trucks? What else is going to come on to minimize tax? I'd rather pay less tax over 2 or 3 years than no tax today and a bunch tomorrow.
Yeah, there's always a strategy to it. What do you think? From a finance perspective, from an accounting perspective, what's the greatest insight that a roofing business owner can think of that will help them find success in that avenue?
Well, dig in. I mean, just get started. If you don't have anything, get started. If you do have a bookkeeper and some books, go pull them up and go look at them and watch them every day, at least every week. My biggest thing for business owners is pull up your profit and loss. If you're using QuickBooks, and then run a percentage of income column so that you have those margins. So you have 100% gross revenue. You're going to see your gross margins provided everything's in the right bucket. Right, so you're hopefully operating at 50%. Let's just say gross profit margin. Then 25% general administrative costs leaves you with a 25% net profit. So put it in a number, because a profit and loss statement by itself is relatively useless.
Yeah.
Also look at it, right? Look at it over trends. Look over month to month, January over last January. Look over the whole thing over the last quarter. Like, okay, marketing was kind of heavy this month, so instead of it being 5 to 8% like we projected, but over the last 3 months, we're on goal. Right? Like, because maybe for whatever reasons, the margins are going to be affected by one job. I mean, if you're doing $50,000, $60,000 jobs and each job is a big margin of your revenue, well, that's going to change all of those other numbers by the margins quite a bit. But that's why we look at things in the margins, because it makes apples to apples kind of more comparable.
Well, awesome, Brett. Appreciate your time today. This has been another episode of the Roofing Success Podcast. If you would like to generate more revenue through your digital marketing efforts, please visit roofermarketers.com to get a copy of the book, The Best Known Roofer. Also, check the training section of the website for guides on everything from running effective pay-per-click ads to how to properly set up your Google My Business listing. Thanks for listening.